fewer negative profit warnings have historically led to better than expected earnings results. So these pre-announcements have been coming, and they've been much more positive than they've been negative. So that's another reason why we are optimistic with the fourth quarter earnings season that is off to a very, very, very good start. You can see it in the returns in the S&P, and also just the overall money that's been flowing in. The fifth reason why we're so optimistic on 2018 and the final quarter of 2016-17 would be stable estimate revisions. Estimates come out all the time. Analysts typically reduce earnings estimates during the quarter that's being recorded and reported overall. So throughout the fourth quarter, estimates remained largely unchanged, while 2018 estimates actually rose, and in part due to the new tax law, without a doubt. So resilient estimates are a positive sign for fourth quarter results overall, and that is just a real positive in regards to stable estimate revisions. When you have estimates being revised on a consistent basis, that means there's definitely volatility in the market. There's volatility in the numbers, and analysts need to have some sort of certainty on what the numbers are in regards to their estimates. It's their job to come up with an estimate that is in line, and many of them get it wrong, as big brains as they are, but it's definitely their job to be able to do it and get it right, and that's what we follow as investors as well, is we want to see what's going on with the estimates for a company or companies in an industry in regards to that asset class. You'll see, like, for instance of estimates being revised down last year, you saw on the energy sector, you saw revisions consistently made and constantly made overall. And those were all revised down. The stocks would then go down, so you can certainly see a pattern in regards to always wanting to be able to watch what the analyst estimates are doing and are they positive. So stable estimate earnings would be our fifth reason why we are so optimistic here with earnings seasons 2017. And sixth, final reason why we are so optimistic is the higher energy prices. Look, average crude prices for oil are 12% higher in the fourth quarter of 2017 than the prior year. And if consumers pay more at the pump, the consumer spending is 2/3 of the economy, then how can higher oil prices really help earnings? Well, the answer is that S&P 500 earnings are more manufacturing and capital spending oriented than the U.S. economy. So higher oil prices means more profits for energy companies. 6% of the S&P 500 is weighted towards energy, and also more investment in energy infrastructure via the industrial sector will be a positive. So believe it or not, even though you might be paying more at the pump, higher energy prices are a positive for the market, and positive for consumer spending. As far as the answer of the U.S. economy, higher oil prices means more profit for energy companies across the board, which means the S&P 500 would go up. So overall investments there is the sixth one, is higher energy prices. So really believe that these six factors will be the biggest drivers for potential earnings and upside earnings season. Now, there's always the potential, so what could go wrong? There's a couple things that are still kind of positive. Let me go into that before as far as something that actually changes. There's also a potential lift from the hurricane-related rebuilding efforts that happened, obviously, between the storms in the Gulf Coast and Florida. This is a positive, and this sort of follows the weather-related earnings drag that actually happened in the third quarter, mostly from insurance losses. So, and though that's really not a clear negative, write-downs related to the new tax law, mainly in the financial sector, have been garnering a lot of attention. But much of that attention also is sort of offset by all the money that's coming onshore from the repatriation. So just to update everybody, part of the tax law that was brought into law here just recently at the end of 2017 was an ability to repatriate your money if you are a corporation and you had money overseas. And many corporations do, and they have trillions of dollars overseas. Like for instance, Apple just announced a $300 and some billion move of money that is getting taxed at a one-time charge of 15%, 15.5%. That was up from 10% in the first negotiation of the tax laws. It went to right around 15. And then there's also, if that's for liquid assets, for illiquid assets, I believe it's 8.5. And so it's just something to think about as all this money starts moving towards the shores of the United States versus being overseas. So that's another reason to be positive, but really trying to look past those that are write-downs. Goldman Sachs came in with a write-down saying that the tax law was going to cost them a bunch of money, but then they were repatriating a bunch of money as well. So it's kind of interesting to see, kind of looking through the tea leaves. But you really have to expect that to look past the tax hits and the focus on the benefits of the lower corporate rate. The headlines really aren't helping the investment sentiment. A lower tax rate leads to reductions in the value of future tax assets and taxes paid up front by repatriating overseas cash are both in the pay now, benefit later category. So you start thinking about negatives here, and then it's really tough to find. One, especially with these 6 positives. So, robust 2018 earnings outlook with the passage of this new tax law in late December. Many companies have all upgraded their forecast for earnings in 2018, as well as economic growth and S&P 500 return forecast have all been raised. Specifically, the new tax law and the potential boost to corporate profitability led us really to everyone to raise their S&P 500 earnings forecast. That would be an annual growth rate of 12 to 13%. And that may even prove to be conservative, depending on how things are going. So never on this show have I been so optimistic in regards to investments. I try to tether any sort of enthusiasm as much as possible, but I'm just seeing some really, really good things out here, and this is, and so is our research department. This is LPL Research. You can find them at LPL Research on Twitter. I highly recommend you follow them. Also, Ryan Dietrich, and is a fantastic follow as well. He does a great job, and if you're into a bunch of nerdy stats, he's the guy. Burt White, at Burt White, is another name that I think you should all follow if you're looking for some great information in regards to what they do and what they say. And we're very appreciative of these reports they have. This actual report today is entitled Fourth Quarter Earnings Season Off to a Good Start. And you can find this on our website. And I'll be happy to email it to you as well. If you want to contact the show and contact me, I'd be happy to send it to you. So that being said, you can contact the show at 219-476-9000. If you'd like to advertise on this show or any of the shows here at WVLP, we'd love to have you. And fantastic lineup on the radio station here at WVLP, and it's only getting better. Many shows are coming online here in the new year, and we are very excited because as I look around the studio today, there are a number of different cameras that have just shown up. So we're very excited to be able to live stream and also videotape the show as much as possible, and get all these wonderful teachings and the great information that comes from this show and many other shows on WVLP out there to you from many different mediums in regards to social media and also YouTube and you name it. So that's it for my fourth quarter earnings season. Off to a good start. I want to thank John Lynch, the Chief Investment Officer at LPL Financial, and also Jeffrey Buckbinder, the CFA Equity Strategist that helped write the report. It's just a really great. LPL is our broker dealer at Farrell Wealth as a wealth management firm, and broker dealers mainly there for guidance and also a partnership, and they are a wonderful partnership for us and what we do as a firm. But then they also have some really, really good support, and this is their research department. It's one of my favorite research departments out there. So I bring to you many of these different things that are listed. They're client approved, so I can certainly send it to anyone that would like to, more information. Be happy to just contact us here. Find us, greg@farrellwealth.com is my email. Feel free to email me anything or any questions on any show topics. We're excited to be with you every single Monday at 10 a.m. and then also 12 a.m. Central is replayed on Fridays. You can find us on the iTunes, find all the podcasts there as well. Just search Money Matters with Greg, and Facebook, LinkedIn, and Twitter as well. Just find @FarrellWealth, and you can find us there. So really excited to bring to you a close of January. I hope everyone enjoys their Super Bowl as it comes up here, whether you're on one side or the other. It should certainly, hopefully, be a good game. That's all we can hope for around here. In Northwestern Indiana, we're typically all Bears fans or Colts fans, and we know how well our teams are doing right now as they all sit at home. So rooting for a good game, rooting for no malfunctions at halftime, and hopefully everything goes really well, and you have a fantastic and profitable week. That's it for the show today. It is Money Matters with Greg. I'm Greg Farrell, CEO and President of Farrell Wealth, registered financial advising firm with LPL as the broker-dealer. Contact us at any time if you need anything, you have any questions, and have some ideas or questions about the show. The show's Money Matters with Greg. It is a financial literacy show, and hopefully we were able to help today and sort of bring to you our optimism here, the 6 reasons for some really solid optimism here in fourth quarter earnings 2018 as we start 18, and we're really off to a fantastic start. With that, I hope you're off to a fantastic start as well. Follow through on those New Year's resolutions. Keep with it. Be strong. And hopefully everyone will have a very happy, healthy, and profitable week. See you next week. Bye.